Namaskar and a very good morning. Welcome to the weekly currency outlook. Last week was a phenomenally great week for the US dollar. It not just appreciated against the Indian rupee, but it also appreciated against the euro and the pound. So last week क्या हुआ जो ये इतना बड़ा move लाया across the currency pairs? We'll start with USD INR. RBI announced a slew of measures to attract capital flows into the country. Now, why capital flows? Capital flows क्यों important है? क्योंकि मैं आपको एक सिंपल सा फ्रेमवर्क देता हूं जिसको यूज करके यू कैन बी एबल टू ट्रेड नॉट जस्ट द मार्केट यू विल बी एबल टू इवन डाइजेस्ट एनी इकोनॉमिक एंड पॉलिटिकल इंफॉर्मेशन दैट कम्स योर वे फ्रॉम इंडिया एंड अब्रॉड. वो मॉडल क्या है? There are three important things to consider when you are looking at what will drive USDINR. Factor number one is foreign capital flows. For example, FPI, FDI, ECB flows, NRI, etc. दूसरा है कैरी ट्रेडर्स और तीसरा है आरबीआई. कैपिटल फ्लोज में किस दिशा में कैपिटल फ्लोज है? इज कैपिटल इनफ्लोज इंक्रीजिंग इनटू इंडिया? इफ इट इज गोइंग टू इंक्रीज इनटू इंडिया, there is going to be more demand for rupee and less, or rather more demand for Indian rupee and more supply of the US dollar, which is going to have a negative impact on the USD/INR. दूसरा factor, which is carry traders. Carry traders क्या है? These are speculators in the offshore and the onshore market who sell USD/INR futures or forwards. Why do they do that? Because they expect the Indian rupee to appreciate. And there is a premium when it comes to USD/INR trading in the forward delivery or in the futures. मतलब अगर spot अगर 79 है, तो 1 month future is let's say around 79.25 है. So that's how they profit, because they sell and on the expiry it's going to convert to spot and they expect the spot to drift down. So it's a double impact. One, the forward premium, दूसरा the appreciation of the rupee in the spot. So this is a typical carry trade. But when they are circumspect about the rupee appreciation, or then when they see danger of rupee depreciation, they start unwinding their trade. They start buying USD/INR in the forward and futures, which creates an upward trend. So capital flows, उसमें से FPI flows is the most volatile and fluctuating. So FPI you have to keep an eye and you can track that data on an everyday basis. दूसरा, carry traders, what they are doing, they are shorting dollars or unwinding their shorts on the dollar. A third, RBI intervening in spot, in the forwards, in the futures. Are they buying dollars? Are they selling dollars? The quantum of intervention, etc. जैसे अभी FPI flows have been consistently negative since last year, end of last year. Or carry traders have been unwinding their shorts on the USD for some time now. So जिसके कारण USD/INR is seeing an upward trend. और upward trend में बाधा कौन डाल रहा है? It is RBI, because RBI is selling dollars in the spot and in the forwards and futures, which is ensuring that the extent of depreciation or the speed of depreciation of the Indian rupee is slower. For example, अगर हम लोग data देखें and compare the Indian rupee's performance against other currencies, 2022 में Indian rupee is a slight outperformer, which is interesting. Though it's an all-time low against the USD, it's still a slight outperformer against its peer currencies. Because a major reason is because RBI has been selling dollars very aggressively in the spot and the forwards and the futures market. So RBI का जो ये measures था, it's basically to incentivize that capital flow, be it NRI flow, be it ECB flow, be it just FPI flows investing in the short-term debt. What is going to be the impact on USD/INR? We don't expect a significant jump in the capital flows in the short term, क्योंकि the flows have dried up not just in India, across emerging markets because of the challenging global situation. एक तरफ slower growth in the world, higher inflation, squeezing incomes, और दूसरे तरफ Fed is hiking rates at a rapid clip. This is not an environment where the flows towards emerging markets are healthy, and that's exactly the case now. And that's the reason why capital flows has been an issue into India. FPI has been selling consistently. Basically, we don't expect a remarkable change in the direction of the flows just because RBI has given them some incentives, but it will have a slight impact on flows like NRI flows. Generally, the second half of the calendar year sees a lot of NRI deposit flows. So, हो सकता है इस बार एक bump up. But on a net basis, we don't think this will have a significant bearing on USD/INR over the short term. And RBI has to keep on selling dollars to prevent the rupee from depreciating fast. Now let's look at the FPI activity. This year they have been consistently sellers. 80% of the outflows has been in the equity market, slight in the debt, but debt may be a negative trend. इसके लिए we are saying FPI flows may not be incentivized unless and until the global situation improves. This is a barometer of the carry trade because जो carry traders है who short USDINR in the forward and the futures, उन लोगों के लिए एक तरफ तो जैसे the view on the USDINR spot is important because generally they do short USDINR in the futures when they expect the USDINR to fall in the spot market in the coming months or years. But another important factor which they consider is what is the premium that is currently prevailing for USDINR in the futures or forwards. This is known as a forward premium. अगर एक साल का हम लोग forward premium देखें and divided by the spot, we get forward yield, and that is trading at the lowest levels since end of 2011, which is pretty low. So एक तरफ जैसे because of the global macroeconomic backdrop, the emerging market currencies are expected to depreciate. दूसरे तरफ, the premium that one can receive by shorting USDINR in the futures or forward months is at a decadal low. So this combination is not very conducive for carry trade. इसके लिए we are seeing a lot of carry trade unwind and even people going short on the rupee and buying the dollar, which is also known as a reverse carry trade. जिसके कारण USDINR is moving up. So we have looked at the picture of the flows. Let's look at the positioning. वहाँ पे options is critically important because options volume dominate futures volume on NSE. And what we see is that we will focus on out of money options ka open interest. We are not so much interested about the in the money options ka open interest because we look at options open interest from a seller's perspective. Because a option seller takes unlimited risk for a premium. So you can think of like an insurance seller. They sell insurance policies, risk policies against a premium. So the premium an option seller gets for selling options is we have to always think about OTM open interest or out of money options open interest from a seller's perspective, not a buyer's perspective, because the seller takes unlimited risk. And what we see is that 79 strike put and 79.50 strike call or even 80 strike call has very large open interest in the weekly and the monthly contracts, which clearly indicates that the option sellers are betting that at least for the next 1 week, USDINR should remain between 79 and 79.5 on the July 15th futures. Currently, the July 15th at the time of recording is 79.34, which means they are expecting this to remain between 79 and 79.5, which also means that every time it gets, if the futures drift towards 79, if there is a pullback, it is an opportunity to buy with a small stop loss below 78.85 because there is a huge support around 79 marked by the large open interest in the 79 strike put, and this open interest is increasing as we speak. Now this is same thing is corroborated by the chart. We have a resistance. This is a spot chart. Futures trade at a premium. So 79.40 on the spot, which roughly means 79.50, 55 on the futures. And this is, I'm talking about the July end futures, that is July 27. And the support is around 78, 80, 85 on the spot, which means around 79 on the July 27 futures. So that's exactly what we saw on the option positioning as well. So place to buy, and looking at the chart, one more important thing, what is the structure of the market? The structure is clearly bullish. How do we know that? Because we see higher highs and higher lows. It's pretty simple. So जब तक higher highs and higher lows है, मतलब जब तक 78, 80 के ऊपर spot USDINR है, तब तक the trend is upward. So buy on dips is the trade. You can use futures, you can use options, up to you, but buy on dips. We are not yet inclined to sell straddles or strangles because of the volatility risk. But if you're at all wanting to short straddles or strangles, instead do hedge strategies like iron flies or iron condors. Now let's come to Euro INR. Euro is trading, or Euro dollar is trading at the lowest level since December 2002. That's a massive, massive drop. So what are the things which are driving the euro lower? एक तरफ यूरोप में gas prices are surging, and which is leading to high inflation, high cost for the companies. So for businesses, and also it is leading to uh, massive cost increase for consumers. So it's a macroeconomic negative factor for such spike in the gas prices, because there is a fear that Russia may turn off the gas to Europe because of the confrontation over Ukraine, and Russia is the biggest supplier of gas to Europe. So that is a critical factor. That's something to keep an eye on. ECB is expected to hike rates this month, but in spite of that, what we are seeing is the plunge in the yield differential. Now, this yield differential is a very important factor when you are tracking the euro dollar, because it drives a lot of flows, that is carry trade flows, and also flows into the debt market. So when the yield is higher, yield differential is positive and increasing, it tends to attract a lot of capital towards that currency. So always keep a track on the yield differential between the Germany and US. And currently it is plunging and it is taking the euro dollar down with it. Now, what happened last week? The economic data, as you can see, was mostly negative. The PMIs, except for the factory orders, the industrial production numbers from Germany, retail sales, etc., were weaker than expected. And so the macro concerns remain for euro. And why we are talking about the euro dollar? Because euro INR is nothing but a combination of two currency pairs, euro USD and USD INR. So जो value है euro INR का, let's say it's around 80.4, it's a multiplication of two currency pairs, euro USD and USD INR. So इसका मतलब है जिस तरफ euro USD will move, assuming USD INR is flat, euro INR will take the same direction. So keep that in mind. So that's the reason why we are analyzing the host currency pair, which is euro USD. Now, ECB ka jo minutes clearly signal that ECB will start hiking rates from this month, but that's not having much impact on the bond market or the currency market, because right now the market is concerned about the macro picture in Europe, the spike in the gas prices and its impact on the economy as well. So what's in store for the next week? We have several other macroeconomic data points. The ZEW surveys, IIP. We have to also keep an eye on the US economic data, which we will cover later on. And definitely keep an eye on the yield differential and the overall risk sentiment. So jab equity markets globally are selling off, that's the time when dollar tends to do well, which means euro dollar comes under pressure and vice versa. This is the chart of the euro and a spot, and clearly we see that it's getting pretty close to those May lows near 80. So yes, it's oversold, but the trend is clearly downward. Lower lows and lower highs clearly indicate that the trend of the euro INR is down. So it's a sell on rise. But remember, when you are trading the rupee crosses like the euro INR, GBP INR, or JPY INR, maintain proper stop losses and have smaller position sizes, especially if you are carrying positions overnight. Because overnight में क्या होता है, there can be sudden and large gaps which can be against you, and if you have a large position, the losses can be huge. And never ever trade without a stop loss, because I have seen countless clients get financially destroyed by not adhering to proper stop losses and adhering to proper position sizes in euro INR, GBP INR, and JPY INR. So don't fight the trend. Have stop losses and have smaller position sizes, and get out when you are in loss. This is a simple way. Otherwise, if you don't follow these four rules, you will be definitely in trouble. So keep that in mind. The trend is down. It's a sell on rise, but with stop losses, 80 is a major support zone. Now let's move to GBP INR. The situation is same there. GBP dollar, which is the host currency pair, is under pressure. The yield differential between UK and US is not supportive for GBP, because UK made the macroeconomic situation is bad, and this whole spike in inflation to almost double digits now in UK is causing a big pain for the consumers, and that's bad news for the businesses as well, because UK is primarily a consumption-driven economy. So if the consumer is getting squeezed, it's bad news for growth. And जिसके लिए the Bank of England is in dilemma. Dilemma क्यों? क्योंकि एक तरफ high inflation है which calls for much higher interest rates, दूसरी तरफ the same high inflation and the weak global growth is squeezing the UK economy. और उसके ऊपर अभी तो they have a political issue because the UK PM has resigned and is now as a caretaker PM. So the new PM may be some time away. So it creates a certain kind of a political quagmire, which is again negative for GBP USD and GBP INR. Now, GBP USD has a fantastic correlation with the equity market. So I have taken the MSCI Emerging Market Equity Index because it is seen as a risk currency. So जब equity sell off है, GBP tends to do bad. When equity rally है, GBP tends to do well. Now, as I said, the PM has resigned, which creates a political quagmire, but it's not yet a political crisis because they are expected to basically elect another leader in a couple of weeks. Now, the next week, the last week, the UK economic docket was light, so you didn't have any significant economic data which could have created a trend in the GBP, and weak global sentiment was definitely negative for GBP. What's ahead? Next week, we have the IIP and the manufacturing output and the GDP numbers for the month of June, which will be critically important. A bad data can send GDP even lower. So, and of course, keep an eye on the trend in the equity markets and the yield differentials. So the GBP INR chart is clearly downward. It's bearish, but there is support around 93 and 93 half, which is around the June lows. So it's still a surround rise, but remember, have stop losses, stick to the stop losses, have smaller position sizes, and don't fight the trend. Otherwise, big losses can happen. Now, finally, the yen INR and the yield is a very important barometer. You should keep an eye on how the US bond yields are doing. When the US bond yields rise, yen INR tends to depreciate. So keep that in mind. Looking at the chart of yen INR, it looks like a range bound between 57 and 59. So yen INR, just keep a few things in mind. You should keep an eye on the US bond yields, because when the yields rise, yen INR tends to fall and vice versa. So it is inversely related. Second factor, keep an eye on the equity market trend. If there is a big sell-off, huge sell-off, not a small one, then yen tends to do well because of unwinding of carry trade, because yen is used as a funding currency in the global carry trade. And third is keep an eye on the oil prices and dollar index. So these are the few factors you need to keep an eye on when you are trading yen INR. And the host currencies in yen INR are USD/JPY and USD/INR. So you have to look at those charts as well individually. What is the trend in the USD/JPY? When USD/JPY is going up, yen INR will fall, and when USD/INR is going up, yen INR will rise. So with USD/JPY, yen INR is inversely related. With USD/INR, yen INR is directly related. Keep that in mind. Now, finally, let's complete the upcoming datas with the US and the India events. US, we have to watch the retail sales specifically, because out of all the data, retail sales and CPI is going to be are going to be critically important. A stronger retail sales and a very high inflation is a recipe for Fed to go on faster hikes. The Fed is already expected to hike by 75 basis points in the July meeting, then 50 basis points in September, and thereafter at 25 basis points, taking the interest rate to 3.5% by the year end, which is pretty close to where the market is expecting the final rate will be, because the final rate is expected to be anywhere between 3.5 to 4%. So taking the rates pretty much close to that level. And from India, the IIP and the CPI will be important. A stronger IIP and a slightly lower CPI can be positive for rupee, but generally these data don't have a significant impact. I mean to say the Indian economic data really doesn't have a significant impact on the rupee. But if there is a outlier, for example, if it is too good or too bad, then it has a knee-jerk reaction the next day. Finally, to conclude, the key levels to keep in the mind and the bias. USDINR is upward, it is between 79 and 79.85 on the July futures. Euro INR, it's downward between 79.70, 80.80 on the July futures. GBP INR range bound, yen INR, it's range bound. So that's it, folks. This is Anindya Banerjee signing off. A fantastic week ahead.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.